Traders, and welcome to a post-market recap for January the 11th. So if you guys are watching this post-market recap for the first time, we give you guys a insight of what we did today in terms of our overall trading, what we learned, and also give you a little bit about prediction. We also share some insights on key strategies that you can employ with your trading behavior, so that way you guys can contribute towards your success. And for today's theme, it's about how can you manage to trade a market that is significantly choppy and provides you opportunities with both sides. How do you know one side is better versus the other? So we had a lot of this discussion in the chat room today, and pretty much I want to go over how I do things. Okay, so I use this pretty much a checklist every day, going over what's happening in the news, and pretty much in that checklist it gives me a overall sentiment idea to understand where the market is, and when I click things off, I know exactly, okay, this is a bearish situation and so forth. This overall checklist that I have is pretty much aligned with my model and its inflection points, which I will get to shortly. But every morning I always make sure I indicate what's happening in the news, and this checklist, it's on an entire calendar. So when I have all this information down, on Notion, which I highly recommend you use, then you can always go back to it to understand what happened before. Journaling these details is going to be very important for your overall success, and it does really help me, because when I look at the overall details here, I always remember to make sure that I follow my rules and look at the overall market heat map to understand how the market is looking overall and which direction is the market headed towards going forward. Okay, so a little bit about what happened in the S&P 500 today. Pretty much we started off with the big text looking good after the CPI report came in. So the CPI report actually showed higher than expected inflation, with December's inflation coming in around 3.3%. The expectation was year-over-year inflation would be at 3.2% and so forth. Okay, so that is a very important thing to go over as well with you guys, okay, in terms of what's happening with inflation. So besides all of that, the big techs did move up. We've seen a little bit of weakness in semiconductors, but the banks and industrials were the reason that the market looked weak overall. So pretty much on my checklist, as you guys can see here, I put a lot of details with regards to Tesla. They had a lot of news today. The first bearish news on Tesla had to do with their them increasing their workers' wages, which adds operational costs, and that's a big problem. Second news that happened midday was pretty much had to do with their overall facility in Germany. The Gigafactory in Berlin is going through production issues and delays, and is expected to be shut down around January 29th to February 11th. So that adds additional risk to Tesla. Okay, so one of my successful plays that we had today, and I've been very consistent with a lot of my trades here, is we made money off our Tesla swings. So I pretty much had these Tesla 230 puts since yesterday, and this is pretty much my third roll up into. I had the 230s. We had the so we have the 235s, the 230s, and now we rolled into the 220 puts for next week, because we know that Tesla is definitely weak here. Okay, and besides that as well, we also managed to score off a beautiful Netflix play here as well. So if you guys noticed here, or if you are in my chat room, I pretty much shared and highlighted that I wanted Netflix calls right off the bat, 510, 520 calls. But instead of that, we decided to pretty much get something closer to the money and sell it fast. So we sold this and we rolled into the next week. So the reason why Netflix is doing good has to do with the news, in terms of one of the executives, forgot which party he's in, but he mentioned that the ad tier plan had 20 million subscribers, or whatever the case is. So that was very critical to know in terms of setting up the success for my mentees. Okay. Now, besides all of that, I want to go over my SPX levels here. So The S&P 500 opened above my level 1 bullish share. And for everyone that is new to watching these channels here, or these videos, each level that I provide my team aren't just any sort of support or resistance level. It comes with a specific strategy here, okay? Now, level 1 on either side, bullish or bearish, represents the gatekeeping levels, meaning that this is the tested market range where the market is looking at. Usually they represent either, if the market's going to be trading in range, it would represent the temporary top or the bottom, depending on how you're looking at it. So based on that, our level 2 bullish or bearish confirms the trend. Now, this could be a strong support or resistance depending on what side you're trading, but usually when this level breaks, it tells you that that's where the stock's going to trend. So for example, we did not see the market break this level 2 bearish zone here, so therefore the trend has not been confirmed. Okay, that is very critical to know, because if the trend was confirmed, any sort of pop that would happen off this number here would only be temporary. Okay, so if we see a drop there and then a pop here, it would be temporary, and you can definitely short again. So anytime you play a level 2 support or resistance level here, you want to sell them quick. Now, besides just me just saying, oh, this is how great my model is, what, blah, 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 I want to actually show you that in my room here, I give everyone proof of my past success based on what's going on with my STX model over here. Okay, so every here is basically instances where I pretty much tagged where these levels confirm the top or the bottom, and so forth. Okay, so I've been doing it for the past 4 or 5 months, and has been showing a lot of consistency. Kind of dropped the ball in terms of putting it recently, but I just want to let you know, for everyone that doesn't know or needs a track record on it as well. Okay, and in my room, I'm actually tracking a lot of all my trades. So we've been very consistent with a lot of these trades. I only messed up on this part here, and that was just me emotionally trading, but so far looking pretty good. What you see here are trades that I'm currently swinging or holding, so those are not yet red. They're still open trades that we plan to hopefully sell tomorrow when the market goes. Okay, so that's where we are today, and we're doing pretty well, okay, because we're up around 15 grand for the entire month, and we use some of the profits to get into that as well. Last month we had an awesome month as well too, with a net of around 19. I was up around 30, but I'm playing with profits, so I took a lot of risks sometimes, and definitely there's opportunities when I play those super lottos that they do pay, so I'm always willing to take those risks, especially when I have profits. Okay, besides all of that, I want to finally close off, and hopefully you guys did get a lot of opportunity to understand how my process works. I want to go over my prediction in terms of tomorrow. Okay, so a lot of news is hitting the fan with regards to inflation and all of that. Okay, one of the biggest catalysts for tomorrow has to do with the bank earnings that are coming up. Okay, so I'm betting on that the bank report's is not gonna look pretty good, and that should take the market down. Okay, we've got J.P. Morgan, Wells Fargo, BlackRock, City Bank, and so forth, all reporting earnings, and it's going to be critical for the market to move higher or lower. So let's see how that works. Second thing here is that basically there's been reports that the U.S. and UK may attack Yemen, and that is definitely going to be very problematic, because there's been threats that the Yemen may attack a lot of U.S. strategic assets. Okay, so that's moving. That can definitely move the market, especially drive oil prices higher, and that can impact the yields, because inflation already came higher for last month. Even though it was a holiday month where a lot of shopping happens, it's definitely going to be somewhat adds more risk to the overall market and the sentiment here. And the third thing has to do with the PPI report. For today, we've seen weakness in Tesla and other industrials, such as Boeing as well, which we are still holding our shorts on. By the way, we have in the money shorts on this. So we're looking to see that if Boeing can get to 218 today, because I kind of mentioned that in my social feed that Boeing looks like it's going to go to 218, so we're watching that. And Tesla has a possibility to see 220 this week as well. Okay, so that's where I see some of these stocks going, and hopefully you guys see an opportunity there as well too. But anyways, I hope you guys enjoyed this post-market recap, and be sure to check out a lot of our other post-market recaps. We're going to be sharing a lot of insight about what we do and how we do it, and also give a little bit of tips. So for today, I just want to explain a little bit about my checklist. It's very important that you guys have a checklist or something to record information on, because when you understand what's happening in the market, you can always back test that and journal your entries, figure out why you took this play based on this news and so forth. Tracking is very critical for your overall development, and I definitely recommend Notion is probably your best friend in terms of tracking all that trading information here. It's also very free, so very important to look into that. And besides all of that, I hope you guys enjoy this call here. See you guys in my chat and in my socials. Thanks for watching and tuning in, and like always, let's get that money.